All right, good afternoon, everyone. I still see some people joining, but we're going to go ahead and get started. We've got quite a bit of content to go through today. Welcome. I want to thank everyone for spending their time with us today. Today's topic is based around some of the most fundamental principles of ENFOS. These are so fundamental, in fact, that we often don't think about them as being the premise of a webinar. But if you Google quotes about mastering fundamentals like I did, you'll find that everyone from Michael Jordan to Gandhi has thoughts on the subject. So in this webinar, we'll take a direct look at cost control principles being used by companies that have taken the leap to a digital enterprise solution for their environmental liability management. Many of these principles have been around since the beginning of modern project management methodologies. However, these methodologies are generally not automated or designed with an end-to-end workflow approach. So today we're going to dive into these 10 principles with that context in mind. Next slide. Oh, you're already there, sorry. So for those that don't know me, my name is Michael Douglas. I'll be today's host. Next slide. Just a few logistical items before we get going. So today's webinar is being recorded and will be sent out to everyone within the next couple of days. You'll also receive the slides. All callers are default muted, so we encourage you to please ask questions in the questions panel in your GoToWebinar control panel. That should be on the right-hand side of your screen. And then finally, time permitting, we will answer as many of those questions as possible live and at the end. Then we'll follow up through email with any that we don't get to. Next slide. So many of you today are already customers or users of ENFOS, but many of you are not. It's about half and half. So I'll provide a very brief introduction. And if you're interested in continuing the conversation, both mine and Evan Alger's contact information will be on the very last slide. So ENFOS is a software company. We help organizations manage all of their project, financial, and environmental data around their environmental liability management projects in one place. Next slide. We're cloud-based software as a service, meaning all that you need to access ENFOS is an internet connection and a web browser. As I mentioned, ENFOS is designed as an expert system specifically for managing complex services, including environmental liabilities. We provide our customers with data and context by allowing them to combine project management, environmental, and financial data all in one place. Strategic partners and suppliers have permission-based access, allowing them to collaborate on projects regarding scope, schedule, and budget to ensure one version of the truth. And having that capability allows our customers to manage their entire portfolio the same exact way at any scale, while reducing their level of effort, automating business workflows, and minimizing risks. And with that, I'd like to introduce our speaker. Roger Well is a co-founder of ENFOS and currently serves as our president and chief operating officer. He's got over 33 years of experience in the field, having started his career as an environmental consultant. Roger has a bachelor's and master's in geology, as well as an MBA. And with that, I'd like to turn it over to Roger to keep us moving.
Great, thanks, Mike, and welcome everyone. We appreciate the great attendance. We have well over 100 people that have registered and are attending this webinar, so we very much appreciate that. So the webinar today, we're going to go over the agenda initially. So we're going to talk about what you will learn. We'll spend the majority or the body of the webinar on cost management strategy and control principles. And we'll see some of those principles in action, how those are actually applied within the ENFOS application. And then we'll end up, as Mike said, with a summary and a Q&A session. In terms of the webinar learning elements, we're going to talk a lot about cost management strategy and why it matters, how technology enables cost control mechanisms, and what your processes and systems may be missing. So those are that's the summary of the takeaways, and we'll have very specific items in each one of these categories at the wrap up. So let's get going on the 10 principles. So what I'm going to do for this webinar is I'm going to identify all 10, just say a word or two about them. Most of them are self-explanatory in terms of their title. And then the rest of the body of the presentation will be focusing on these some of these principles individually. So the first principle around remediation cost control is what we call the remediation project hierarchy. And that has to do with your primary organizing principle around projects, programs, portfolios, and how your business units, your regions, your countries, and then ultimately the owner, the root of the hierarchy is established, and how that's used to help manage and control costs. Second principle is all around the work breakdown structure, which most everybody knows through their general project management experience and training. But we're going to spend more time talking about the extension of the work breakdown structure across all financial processes and the importance of that. Number 3, connecting or linking financial processes to create end-to-end workflow. So this is about eliminating process silos for different business functions. Reserve management or provision management versus our proposal management versus our work commitments versus our spend and our invoices. We'll talk about the importance of linking those processes together in a seamless way. Refine planning and forecasting. So you might be asking yourself, what does planning and forecasting have to do with cost control? Well, it establishes the baseline from which all of the work that you will commit to environmental consultants and laboratories and contractors, how that will be controlled by the primary plan or the forecast that has been approved. Seamless financial planning changes, very, very important in remediation. This work is highly complex, has very high levels of uncertainty. There are a lot of moving parts in terms of the supply chain and specialty companies that get involved. And there's a lot of trigger events that happen over a 10, 20, 30, sometimes 100-year timeline on any individual remediation project. So change management is very critical around cost control. Know what you're buying is number 6. And when we talk about know what you're buying, we start with the work commitment, right? That is the purchase order. Maybe it's called a work authorization or a work order, but it's a work commitment to the supplier who's responsible for that job as the general contractor or the primary consulting partner. And then the spend is the spend, right? It's the cost, the actual cost around executing the work. Number 7 is automate project financial controls. When you talk about automation, you can't have that conversation without talking about technology and how technology can do the work of a human when it comes to project financial controls. So we'll spend time on that. Eliminating time theft. This is about where do we really want our team spending their majority of their time? What are the high value activities versus the low value activities? Build agility to defer or accelerate spend. Certainly a major element of cost control because business conditions change, right? Some years we're going to budget more money and we're going to want to accelerate work. Other years, maybe we have set a budget, but something happens and we need to defer spend. Sometimes that's business driven, sometimes that's regulator driven, sometimes that's remedial technology driven. So we're going to spend time talking about that. And then finally, number 10 is lowering your overhead. So this is, you really can't leave this element out when you talk about cost control, right, and cost management. So we'll spend some time talking about overhead costs and how technology can help you reduce those costs while giving you actually more oversight, more data, and more knowledge. Before I get into the principles, though,
All right.
I want to spend a little bit. Mike, do you have a question?
Oh, nope. I'm going to come in here and do our first poll.
Oh, perfect.
All right. So just to get the conversation going here, just give a few seconds for everyone to answer this. But how well does your primary remediation software system help you with these principles? And I know not everyone on the call is using ENFOS, but you're using something, be it spreadsheets or databases, or you've built your own system at your company. So we'll give just a couple more seconds here. And close poll. So 32% said very well, 54% okay but not great, and 14% not very well at all.
Excellent. Thanks, Mike.
Yep.
Okay. So this is a little bit of background information before I get into the individual principles, because we don't want to talk about cost control without talking about it from a more of a strategic viewpoint. Most people have seen this type of a chart or a visualization before, right? Where we have initiating projects, planning, executing, monitoring, and controlling, and then closing. So I want to spend time talking about that on this slide and the next slide. I think that it's important to know that enterprise software like ENFOS, it's designed for portfolios. Basically what we mean by that would be, I'm an organization that has multiple remediation sites to manage, not just a single site. Because you can apply these principles to both of those levels, right? A project level as well as a portfolio level for a roll up and a consolidation of the overall book of business. So I want to point that out. This is in context of this strategy, but from both levels, single project level as well as the portfolio of projects that you're managing. Okay. It must be done systemically. Now, if you have one project or you're only responsible for one project, you can think about this in a little different way. But if you're managing the enterprise, the remediation function, or a large group of that function, you have to think about this at a higher level. How do we have repeatable and proven practices that make our jobs easier, give us better data, more timely data that we can use for insights and decision making? So you have to have the context of the strategy. Now, the monitoring and controlling area is where I'm going to spend the majority of our time today, because we're talking about cost control. But you have to have the context of where that fits in, right? You can't monitor or control something that doesn't already have a plan associated with it, right? Which means we've already initiated a project. We're doing a project for some reason, or a group of projects. So keep that in mind. This fits into an overall strategy. Okay, further on that strategy, I wanted to talk about this framework to inform. So over here, you see that we have those same categories: initiating, planning, executing, and then monitoring and controlling. And when you really break those elements down to their essence, the initiating projects is why do anything at all, right? Why does the remediation program exist in the organization to begin with? Well, those are primarily external factors. They're environmental regulations, they're reporting and disclosure requirements that we have, particularly if you're a publicly traded company. We have a standard of care within our organization. We have social responsibility. This is why something is being done. But that's primarily, right, a business strategy. Companies and organizations around the world, they do that differently, right? They have different viewpoints or views of that, but ultimately it comes down to a business strategy to clean up contaminated sites. When we get into the planning area, this is basically where we're saying, okay, we have something to do. What do we need to do? And this is where the consulting community, with many people on this call, belong to. They shine here, right? They have expertise. They have their remediation engineering expertise. They have their regulatory and even legislative expertise. They have their hydrogeologists and so on. But it's what do we do, right? It's the what. That's a remedial strategy element. The how and the when we do it is, in essence, the work plan, right? We've made a remedial decision. We've maybe collaborated or worked with the regulators on that. Now, how and when do we do it? That's the work plan. And then finally, you get down to doing it, right? Doing the work. That's where the rubber meets the road. From a cost management perspective, I'm talking today a lot about these elements here at the doing the work level: oversight costs and direct project costs, right? Now, in the work plan, the remedial strategy, and the business strategy, there certainly are costs. And the decisions that get made there are critical, ultimately, not only to the risk management and the liability management, but the cost structure that we're about to embark on. And a case can be made, and I'm a strong believer of it, is that these remedial decisions, the strategies, the remedial technologies, those decisions that get made early on based on site characterization, feasibility study information, and risk assessment are critical to the overall cost structure. But once I've decided on that, now I'm moving into an execution phase, right? I'm planning that work very specifically, and I'm doing the work. The actual cost then, right? The actual cost of doing a work, that is going to be used to inform decisions and performance all along the way as we do that work, right? So my direct project costs are informing how well we're doing from a project management perspective on the work. Our costs inform the work plan, right? Did we plan that work out and time that work out properly or not? Those costs inform the remedial strategy decisions that are going to be made in the future, right? How good of a decision did we make on that strategy for that particular site or this group of sites? And then certainly those costs inform the overall business strategy as well. So this slide, maybe out of any slide that I show, really shows how that ties together, right? Ultimately, though, you're going to use the data, right, from all of these planning and decisions and ultimately the work, along with the actual costs. You're going to use that information to inform ourselves about how well are we doing and where are we going from here. So now I'm into the principles. This was principle number one, the remediation project definition hierarchy. And if you've been on our past webinars, or you're an ENFOS customer, or you're a consultant who's using ENFOS on behalf of a customer, you've seen this and you know what this is, but it's a critical element in cost control. And ultimately, we have sites, right, that are in the portfolio that are in some branch of the organizational structure, right? They're in a country, they're in a business line, they might be in some group or portfolio, but we have sites. Depending on the size and type and even location of the site, we will have one or more areas of concern. This is the lowest level of a remediation site. Now, you might call it something differently because it's just a label. You might call it a project. You might call it an operating unit, right? The label doesn't really matter because in ENFOS, your labels are customizable. My point is, when you're looking at solving a problem at a site level, especially those that have multiple areas of concern, how you create the project schema is ultimately critical. And it just goes back to basically the old project management proverb, right? I have a big problem. The way to tackle that is to break that down into smaller problems so I can effectively manage and control those. Okay? Now, when we first designed ENFOS with this hierarchy structure, our area of concern more or less was an incident, right? So if I have a mega site, I might have 20 or 30 different areas of the site that we're cleaning up. A lot of our customers, their sites might be smaller, so they have one area of concern per site, which is fine. It's a one-to-one relationship. But for your mega sites, how you define and create your AOCs is critical to your ultimate cost control mechanisms, as we'll see here in a little bit. I'm going now deeper into the work breakdown structure of a given area of concern. And this is principle number 2. Principle number 2 is the work breakdown structure. And I'm showing an example work breakdown structure here. This is a 4-level work breakdown structure. And at the top of the chart, you'll see that this is the area of concern that we looked at on that previous slide. And if you have a parent level above this will be the site, but you will have many areas of concern, particularly on larger sites. So the AOC, when I start looking at now breaking down remediation work, the work breakdown structure, level 1, generally follows the life cycle phases, right? And you can use, there's many different work breakdown structure systems available to you. If you're in the Superfund program, you're going to follow a certain work breakdown structure. If you're in a state underground storage tank program, you're going to follow a different structure. But this example here is basically the generalized standard work breakdown structure. Level 1, because through the life of this project, we're going to do work associated with each phase. Now, you could be doing work in multiple phases at the same time. You can even backtrack, right, in these phases for different reasons. So it's not always linear, and they're not always one at a time. Level 2 is the next level down. We generically call level 2 activity, but each phase can have its own list of standard activities, right? Level 3 is the next level down, cost element, and level 4 is component. When you're down at the component level, from a cost management, cost control standpoint, you're generally now talking about your basic accounting elements of indirect labor, material, equipment, subs, ODCs, and other types of basic fees. It's the lowest level of detail in the work breakdown structure. The majority of our customers will standardize on a single work breakdown structure across their entire project portfolio. They do that to aid them in their forecasting for their reserve or provisioning, as well as their non-reserve work. So they use that for their forecasting. They also use it for their work commitments, as well as their spend tracking. And I'm going to show you some examples of that. So what I'm showing here is a detail of an example 4-level work breakdown structure for remedial action. So you can see I've got remedial action as my level 1 phase. My level 2 is the activity called planning and permitting. I have another level 2 called equipment. I have a level 3 called regulatory meetings and permit application. And then my level 4 component, you can see I've got direct labor, indirect labor, travel, subs. These are just examples. But this is what it looks like as it unfolds, right? So you can see what we're doing here is we're creating a schema, a framework from which we're going to do all of our planning and budgeting, all of our work commitments, and all of our spend, right? Critical elements. That work breakdown structure, as I've been alluding to, has to be extended across all of your multiple financial processes. These are the three main processes: planning, proposals and purchases, I call that work commitment, and then the invoices and the spend. Generally, what we see is that in planning, because I'm now planning, this is my life cycle forecasting, right? This is my planning. Generally, I will recommend to customers, or customers will have a process that they want to follow where they're using level 1 and maybe level 2, because I'm projecting cash flow forecasts out for the next 30 years, 50 years, right? I pretty much know as I meet certain stage gates or milestones in my project what my phases and work activities are going to be. But what I don't know probably at that level is the cost element component. When I get closer to doing the work and I'm going to make a work commitment to a consultant, contractor, or lab, I expect there to be a proposal that gets submitted, and I expect that to be lined up with my plans, and then it ultimately will be approved as a purchase. The WBS extension usually goes deeper on the work proposal and the purchase, right? So now I'm lined up, right? If my forecast has remedial action and O&M, I only want remedial action and O&M in my proposal, right? Because I don't want to be committing work against a phase that wasn't already authorized in my forecast. And it lines it up from a data structure standpoint. However, when I'm doing a work proposal, I can now get more granular in my project management level of detail of the work scope or the statement of work. So now I can be asked to go to a lower level in the WBS, more granularity. Once we've done the work and that is now being invoiced and we're doing cost tracking, I can go down to the lowest level in the work breakdown structure because the work's already been done, right? The suppliers know, right, out of the spend for this monthly invoice or for this milestone released invoice, I know my labor and equipment and materials, and I know that cost accounting granularity, so I have that data structure. But everything now rolls up, right? If it's labor and it's on permitting and it's part of our construction remediation plan that is in our remedial action phase, these all line up vertically, right? These costs all roll up to this high level phase, which matches my proposal, which matches my plan. So this extension of the WBS, both horizontally across those processes and then vertically into the depth of the WBS, is a critical cost management and cost control tactic. Okay, principle number 3. This is principle number 3. This is connecting or linking processes for end-to-end workflow. I've been touching on this, but now you see a slide dedicated to the concept. In order to do cost control at the most in the most effective way with the least amount of resources and administrative burden, having these processes linked and within the same software application is a must. And if I start at the bottom, my spend, which comes through my invoices and my cost recovery, right? This is linked to my purchasing, not just at a PO number or work order number level, but at a project management level of granularity. And I have an example to show you in a second about that. That purchase or that work commitment to the supplier started out as a proposal, right? An SOW, a cost estimate, whatever you want to call it, but it's a proposal that once approved results in a work commitment and then will result in spend. So I've linked purchases to proposals and proposals linked to forecasting and budgeting. I'm doing that so that I can establish and enforce cost controls throughout this end-to-end workflow. with a minimum amount of redundant data entry, consolidation of spreadsheets, extracting reports from system A to match up with reports from system B. So a very critical element. I'm going to spend some time later talking about the financial controls, but once you have these linked processes, now you can configure your financial controls. How do I make sure I don't overcommit my balances? And how do I make sure I don't overspend my commitments? And here's your work breakdown structure as we talked about before. So how does that all tie together? This is a very enlarged screenshot from, actually it's just a part of a screen in ENFOS, but I think it was very important that I tie this together for you early on in this discussion. So we talked about planning, we talked about spending and work commitments. So here's how it ties together from a remediation reserve accounting standpoint or a lifecycle management program. So I have my original estimate. This is my original forecast. I'm making adjustments through time. This is a principle we're going to talk about here in a little bit. How do I do change management through time? These are my adjustments. My life-to-date spending is tabulated here. My life-to-date spending can only happen if I have an approved proposal and purchase commitment, right? So I've got $245,000 in change in actual spend. And here is the balance. So this is just doing the math, right? The good news is it's in real time and it's to the penny. So as I'm spending money, right, I'm drawing down from my plans, and my plans are an accumulation of estimates through time. Based changes get made, as most people know, sometimes on a quarterly basis, sometimes on the annual deep dive, sometimes on a trigger event. We need to make the change now because something just happened. A regulator just made a decision, or operations said, you know, we got to get out there and get to this remediation now. But anyway, that's how that ties together within the ENFOS application. All right, my next principle is refined planning and forecasting. This is principle number 4. I break refined planning and forecasting down into these four areas: uniformity, ease of updates, built-in accounting logic, and decision support. I've already talked about many of these, but again, this puts it together in one graphic for you. Uniformity has a lot to do with what we talked about. We talked about the project hierarchy, and we talked about the work breakdown structure, and we talked about the extension of the work breakdown structure across all processes. So that is one system, that's format, and that's schema. Ease of updates is number 2. Ease of updates is really around how do we make life easier on our project teams who have to update these plans and forecasts on a very regular basis. And don't forget, these, you know, these 30, 40, 50-year projects, they're having plan changes made 4 times a year. So any given remediation project can have well over 100 plan changes in its life cycle. Right? So we have to make that work easier on our teams. So having history from the initial plan all the way to the current plan in one place. Having software features like cloning and editing within the application create that ease of updates. And then there's also features like rolling forward the overspend or the underspend from an accounting period that we just finished. Maybe on the year, could be the last quarter, could have been the last month. Built-in accounting logic, I've already talked about that when I talked about how ENFOS calculates the balances, but also the adjustments for the accounting methodologies around NPV and accretion as well. That needs to be built into the application. And copying balances. right? So again, as I'm doing my new estimate, I need to make sure I'm taking into account the spend that has already happened in that period of time that just elapsed. And then decision support. So decision support is beyond the financials and the work breakdown structure. It gets into technical justification, internal control compliance, and backup documentation. So here's an example. This is a screenshot from ENFOS. And this is in this refined planning and forecasting bucket, but I just wanted to point out a few things. Here you see a two-level work breakdown structure, phase and activity. You also see your timeline planning horizons. This can go out as far as your business needs. And so I've got a two-level work breakdown structure, and I have a cash flow forecast in every cell. So that cell matches up to the year that we plan to spend that money, and then the scope is the activity and the phase. So I just wanted to show you an example there of what that looks like when you have refined your planning and forecasting within the application. In planning and forecasting, because we're looking out long term, our customers and those of you that aren't customers, you also have scheduling requirements, right? So I'm showing you an example screenshot from ENFOS. So not only do I have my financial projections, I can have a schedule, and then I can have my decision support all in one place for every plan change over the life of that project. This gives me something to control my costs and schedule against. It's the baseline. We know the baselines change. That's the change management part. And that's where we're going to here. So this is principle number, let me get to it here. This is principle number 5 from my original slide. So seamless financial planning changes. I mentioned before that a typical project can have 100 to 120 plan changes over its life. Plan changes are very important. They tell us if we're following our process properly, right? Because maybe we're only making adjustments to our forecasts based on reaching certain stage gates or milestones in the project lifecycle. They also tell us our estimating, they can give us information around our estimating accuracy. And what you see here should align with our strategy, our business strategy or policies around reserve management and spend management. But tracking plan change reasons are a critical element. It basically answers the question, why are we proposing this plan adjustment? And the technique that ENFOS has for customers to use is this plan change reason drop-down list that's configurable based on your business requirements. I'm just showing you some examples here. But you want these to be uniform and you want them to be mandated so that every time we're doing adjustment on a project's forecast, we're tagging it to a reason or a specific factor involved in that. Why is that important? It's important because that information is going to inform us on our strategies and our performance. So over here to the right, you're looking just at an example bar chart. At the end of a year, at the end of a quarter, or really any period of time, if you're tracking your plan change reasons appropriately, you're able to come in and evaluate why did our financial plans change by reason. So in my example here, we had underestimated cost, we had prolonged schedule, we had regulatory triggers, we had some new liabilities come into play, right? Initial liabilities, projects that we didn't know about last year or last quarter. And guess what? We even overestimated some of our forecasts, so we actually took some reductions as well. But again, this is about informing the teams and informing the executive group on what is our future spend, what's our current spend, and how well are we doing, and then where should we spend our time and efforts focusing on our strategies, right? So I wanted to point that out. That was principle number 5. Principle number 6 is know what you're buying. I
Hey,
talk
Roger,
about this in, yes.
we've got another poll.
Oh, thank you.
So does your remediation software system do a good job at tracking your liability forecast changes through time? I'm going to leave this open for another 10 seconds. Give everybody the opportunity to answer. All right, and let's see the results. 50% no, 35% yes, and 15% don't know. Good information.
Great, thank you.
All right, yep.
Okay. Principle number 6, know what you're buying. So from a cost control standpoint, understanding what you're purchasing and where your spend is going is a critical principle. We're going to talk about that in a little bit more detail here. Project management enhanced procure to pay. So if you were to take this question, what are we buying, when are we buying, and how are we buying, you might have a procurement person or a procurement IT or purchasing person say, well, that's our P2P system. And that's fine, but that only gives you a small slice of the picture. Project management enhanced P2P or procure to pay gives you the granularity that you need to actually make sense of it, right? From a remediation portfolio standpoint. I'm going to show you a couple examples of that. Scope and cost control baseline from the approved plan. So before I buy, I have to have an approved plan, right? That's a forecast, that's a budget, that might be an annual operating plan. But again, that's a very important piece of cost control, is having a baseline that you're going to measure that spend against. Project management granularity detail from the supplier proposal. And then you can capture the most detail of your actual buy or your spend through the invoice. But guess what? The invoice just isn't a transaction so that the supplier can get paid, even though that's very important, as we all know. But the invoice and the backup of the invoice actually has the project management level detail of the actual spend. So that gives us the data that we need at an enterprise level to know what we're actually buying. So I'm showing you here an example of a proposal in ENFOS. So I'm looking at this in terms of how do I know what I'm getting ready to purchase? I wanted to just point this out. So I have my work breakdown structure, right? These are aligned with the approved baseline plan. So my phases and my activities. The scope of work has tasks and subtasks and resources built into it. So in my basic example here, we have project oversight, we have some project manager time and some project engineer time, right? It's lined up to the phase and activity from the financial plan. It's involving the contractor's rates off of their rate sheet. So there's a $150 an hour project manager and a $90 an hour project engineer, and these are the quantities. So unit pricing on labor rates or equipment or materials is just one estimating methodology that you all use in ENFOS, but I wanted to show at least one example of that. I can also do fixed price, lump sum, and various other contracting mechanisms or hybrids of those. But you can see the proposal gives us project management level granularity of that total cost, right? Now, from a cost control standpoint, the business will make a decision to what level do I want to control this cost. And I'm going to talk a little bit more about that. This is an example of an invoice screen. And what I'm showing here is that now my invoice is lining up to that approved vendor proposal by task, by phase, and by activity, right? I can't invoice you as a supplier unless these tasks and phases and activities were in my approved work plan, which is that proposal, which weren't available to me to even select from if they weren't in the approved financial plan that controls all of this. Okay. Now, down here, we see, again, we see the tasks and the phase and activity, and then these were the unit items. Now, believe me, we have had some customers who want to control spend at that line item level, even though they may have money left in that overall work commitment. Now, that's tightening the screws down really tight. Most of our customers allow some leeway in there. But if you want your financial control to be down to the line item detail level, you can control your spend based on the approved quantity, the remaining quantity for each specific line item off the rate sheet. Again, I just wanted to show you an example. All right, my next principle is automating financial controls. This is principle number 7, automating project financial controls. I have 9 of them on here. I'm going to go through these pretty quickly. A financial control around your available to commit. That's a budget control for both scope and cost. Let me get through these, and then I'll come in and just point out a couple notes. So these are 9 automated project financial controls that can help you with your cost management and your cost control. These are configurations in the software. You determine if you're using the control or not, and then if you are using it, you determine to what level of detail, right? So basically, what I have here is budget and spend controls. And if you see, and where I say scope and cost, the cost has to do with the financial baseline, right? I can or cannot exceed that amount. The scope has to do with the work breakdown structure. Can I or can I not approve spend based on certain work breakdown structure activities that are aligned with this scope? So there's both scope and cost controls. Those are all configurable. And again, for time's sake, I won't go through all of these, but you can see starting with the planning, I can control how much I'm committing to our supply chain. I can control how change orders are established and approved. And then on the spend side, I can control it down to the unit item and rate level. I can even have overspend tolerances set up so that I might give a little extra stretch in the rubber band. And then finally, the last one is the classical project management technique called earned value, where I'm measuring my spend against actual work completion. So these are all automated financial controls to help you with your cost control goals. This screen is a takeoff around those cost controls. So this is a screen in ENFOS that is calculated in the course of people doing their work. No one has to enter any information here, but this is a single project. This is my phase and activity. This is the approved plan amount by scope of work using my WBS. How much we've spent, that's all of our approved spend. My balance, right? So it's my plan amount less my spend is my balance. And then ENFOS calculates the open commitments. This ensures that we do not overcommit in purchases our financial control plan, right? So in this case, we have 6.5 million of this remaining balance still available to commit. But unless I make a plan change, I cannot exceed that with work commitments. The business decision is to what level you want to control your work commitment checks, to the total project or to the individual work breakdown structure elements. All right, my next principle is eliminate time theft. This is a more general principle. This is principle number 8. So the one thing that we do know, again, from data, that about 60% of remediation spend is from labor costs, right? That's over many, many years and many, many projects. So the labor cost is more than half of the total remediation spend. There's also overhead and management costs within the customer organizations, right, to oversee and support the projects with the consultants. So sorry about that. So labor is very important. So how do we eliminate time theft? Well, what we recommend is that you focus your efforts, right, on these administrative type activities, process management, transaction management, your financial and project controls, your IT costs, your reporting, and your back office work. You eliminate as much of the labor and manual efforts around these activities so that your teams can focus on the more important things, right? So if you're running a remediation program and you're hearing from your teams, why does it take us so long every quarter to do the reserve updates? You know, I feel like a project accountant instead of a remediation project manager. If you're hearing those kind of things, those are symptoms of them spending too much time dealing with these lower value activities that are required, but they're not spending that time on these higher value areas, such as their strategies, regulatory advocacy, stakeholder management, communications internally and externally, managing people and suppliers. Okay. The next principle is principle number 9. This is build agility to defer or accelerate spend. We get asked about this a lot. And I'm going to go ahead and provide you with all these details and just talk for a few seconds about this. The business challenge around this is that things change during the year, and we either need, you know, on individual projects and as the business unit as a whole, and we need to either defer or accelerate spend. How do we go about doing that when our information and our work commitments is spread out all over the place, right? So having the ability to do a rapid assessment of your planned spending on a timeline in one system is critical to that from both a project and a portfolio basis. Ease of changes. This was on one of my earlier slides, but if you're looking to defer or accelerate spend, you need some tools to help you with that. So things like temporary spending freezes. Sounds easy, but how do I execute that, right? So those are features that ENFOS has built in to help solve this problem. Permanent work commitment stoppage. I can close out a purchase, right, when and if needed, and then start new again in a very easy, efficient way. Auto roll forward of overspend and underspend to future time periods. So there's just accounting logic to move that over or underspend into the next period automatically if that's a process that your team would want to embark on. And then my open commitment validation against my plan changes, right? That's another feature here around ease of changes. The last principle is principle number 10, lower your overhead. And let me expose these and just talk on a couple of these. Reducing administrative burden of tracking and reporting information. Increasing productivity, your caseload through standardization and uniformity. These are ways you go about lowering your overhead, right? Elimination of redundant and even human handling of transactional data. There's no reason that a proposal that's originally written by a consultant that gets emailed and sent around many times and reviewed, there's no reason that that same data has to be manually keyed into a purchase requisitioning system. It's just not necessary with today's technology. It's a massive waste of time. Same is true on invoices, service entries, and spend. Just not necessary. That also not only improves the timeline and reduces effort, it reduces errors, defects, and surprises. So there's a little quote here from an actual customer of ours about lowering their overhead. They basically went from 13 people to 7 people on their internal staff over the last 5 years, and they attribute a lot of that to having ENFOS in place, a system that's designed specifically for this work. I added a bonus. This is number 11, and it has to do with business intelligence. This is an example dashboard that was created from a test set of data in ENFOS. But having business intelligence at your fingertips without having an army of consultants compiling it for you is critical. This gives you the data you need to control those plans and forecasts and the spend against those, right? By various types of filters, by project manager, by phase of work, by business line, and so on. This is another critical element in this modern era of technology that's a extremely important piece to your cost management strategy. All right, in summary, I just have a few points here. The traditional cost-cutting initiative have reached a wall. It's hard to squeeze blood from a rock, right? When the squeeze has already been on for many, many years. So we have to look for new and innovative ways. So that's this informed and strategically focused cost management. We need to make sure that our limited resources are targeted where they can deliver the most value. And information technology is the enabler for this. I just want to point out my note here. When I think about all of this that I talked about, you have to pay attention to the detail. You cannot get to successful cost management and cost control without it, right? This is about attention to detail. So with that, I know we've used up just about all of our time. We're into the Q&A session, Mike.
Yep, Roger, we got a ton of questions, so I'm going to make some executive decisions here and just ask a couple to get us through the next 3 minutes here. Okay, so first question, for very large sites where we have many different areas of concern, is there a grouping level between the site and individual AOCs or projects?
Yeah, that's a great point. Yeah, that basically you want to have a more tiered parent-child relationship between your site and this long list of areas of concern. So the answer is yes. ENFOS has up to 20 levels in that hierarchy structure. There's a level in between the site and the area of concern that can be used for that. We typically call that the AOC group, but it's a grouping of areas of concern based on maybe geography on the site or like contaminants of concern. But yeah, there's an intermediate level to categorize your AOCs into an AOC group that then roll up to the site.
Okay, all right. Next question. So we get new sites and projects added to our portfolio each year. Can ENFOS help us track the impact of those to our reserve and spend?
Yeah, I didn't talk about this, but if you can think back to that hierarchy slide where we had the site and the AOCs, there's a lot of critical data on that area of concern, right? It could be the incident date, it could be the creation date of that AOC in ENFOS. So we have, those are all date boundary managed, right? They have a very specific date. So I can see year to year how many new AOCs we've created. Being able to segregate out your forecasts and your spend, at least for analytics purposes, on your base load sites that we started the year with, versus these new AOCs that were created or just generated in this current year forward, being able to segregate that out with a tag is very important. We typically call that base load, incremental, and acquired, because you can also, through business acquisitions, acquire liabilities, sites that have liabilities, that have projects. but a very important part of being able to tell the story about how our program as a whole is doing. New sites coming in or new projects coming in, us doing our work against our budgets and our plans and our commitments, and then at the end, how many sites are we closing or completing during that same period of time.
Great. So Roger, that's all the time that we've got for live questions. If you asked a question and we didn't get to it, we'll respond via email. Couple final wrap-up items. So as we mentioned in the beginning, this webinar was recorded. The recording as well as the slides will be sent out to everyone that registered and participated. Additionally, feel free to reach out to me. Let me know what you liked and didn't like about today's webinar. If you've got suggestions for future webinars, we're always looking for great ideas. And with that, it concludes our session today. Really appreciate everyone's time and enjoy the rest of your day. Thank you.
Thank you, everyone.